the pace mortgage method, sub 2, which for anybody not familiar, is purchasing a property subject to the existing mortgage. So all of those mortgages that were, either started or refinanced in 2020, 2021 with like 3% interest rates are amazing, and they can cash flow. And like today, going and buying a property, at like 7% or whatever it is today, and it's a lot more expensive, and the rate is really high. It doesn't cash flow, or many of the properties won't cash flow.
Especially at the price point. And I think one of the key things with subject to is that there's this need there, because the sellers, maybe they bought their house at an inflated value. And so now their houses aren't even worth that, so they can't even sell it.
Yeah.
And a lot of investors can't even buy them with a new mortgage because of that, what you just said, with the interest rates are higher now.
Yeah, I just purchased one 2 weeks ago that was the case. Built in 2023, beautiful home. It's brand new. It still smells new. And they have, for whatever reason, they needed to like move out. They just got a tenant in there. He's on a 2-year lease. It cash flows on the existing mortgage rate, which is, it's 2023, so it's still high, right? Still a high mortgage rate. So if rates, come down or continue to go down, we could refinance that and have even better cash flow down the road. But there, it's less than a year. He doesn't have any equity or very little equity. So he'd be writing a check to sell it. And so we came in and said, hey, you know what, instead of writing a check to sell it, which you don't have the money for, what if we gave you 15 grand? That's a huge swing for you.